Good morning. Today is Tuesday morning. Market just opened up Tuesday, February 26th. We're looking at the daily chart of the E-Mini S&P 500. Again, as you recall, this is the yearly open, right? This is the first trading day of the year right down in here. Market's been up, right? As I pointed out last week, look at the market came down to the 38.2% retracement, right? Again, measured from the yearly low to the yearly high, hit that 38.2 and rallied quite a bit. Now remember, this low, where it bounced right in here was 1496 and a quarter. 1496 and a quarter to 38.2, rallied up to yesterday's high before the huge sell-off yesterday. Okay, yesterday's high was 1524 and a quarter. So the market rallied about 30 S&P points. 30 S&P points from that 38.2. Now the yearly high is 1528 and three quarters. Market opened up higher yesterday, couldn't sustain, and started trading down. All right. Now there were many great selling opportunities yesterday if you were day trading. So what I want to do now is quickly flip to a 3-minute chart of the E-Mini S&P 500 and show you how you could have taken advantage of yesterday's down move. Now, again, this is a daily chart, and if you look at yesterday's range was pretty significant. Okay, by far the largest range that you see actually on this chart all of this year. I mean, look at these. The daily ranges are pretty small this year, right? Now, this day right here, which was, I think it was the 20th of February, right here, February 20th, had a rather large day. We had a 22-point range. Yesterday's range was what, 85, 15, and 24, about almost a 40-point S&P range from high to low. Pretty big range. But again, you want to know how to take advantage of moves like these, okay? So let's flip now to a 3-minute chart, and I'll show you a few real nice setups. All right, here we have a 3-minute chart of the E-Minis, okay? Market opened up higher yesterday, traded down a little bit, and then ran back up. Take a look at this. The market came up and matched. Look at two equal highs right in here. Okay, could not break the high. I believe that high was what, 1524, 24 and a half. Again, that high yearly high 28 and three quarters, only 4 and a quarter points down from the yearly high. It couldn't take out the high of the first bar that put in that high of 24 and a half. Failed. As soon as the market came down through the low of the day, okay, after not being able to test the high of the year, okay, and came down, I'll tell you exactly at what point I was looking to sell the market. As soon as the market started penetrating down through the 50 exponential moving average right in here, and the market dropped down to this low, that's when the setup occurred. It was at this point where I was aggressively looking to sell the market short. So one of the first things I did was I drew the Fibonacci retracements from the high of the day down to the low of the day. So the first level I was looking to sell, okay, look at the 38.2% retracement at 1516 and a half, three quarters right in here. Okay, this really was the first place. So anywhere between the 50 exponential, the hot pink line here, and the 38.2 of the day right in here, right where I'm boxing off, right in this area, that was your first sell of the day. Okay, it's set up beautifully. Now if we take this further, if we take this chart further, take a look at what happened. Finally the bars started turning red. Now, just because the bars are green doesn't necessarily mean I'm only looking for buys, okay? You need to look at the whole framework and the context of the market and what we're doing. So, officially, based on an intraday basis, as soon as the bars turn from green to red right in here, that's where you would, I mean, obviously, nothing but looking to short the market. So, at that point, look at this. Look at how the 50 and the 200 exponential came together right at the daily pivot. Once the market penetrated down through the daily pivot and officially down through the deep purple line, which is the 200 exponential, Okay, this is the area in which you're looking to short. You had a lot of many areas of confluence here, right? You had the daily pivot, back to the daily pivot, the 50 exponential, the 200 exponential moving average. This area in here was the optimal selling opportunity yesterday. 1511 to 1511 and a half was the short right in here. All right, beautiful selling opportunity to the downside, and as you can see, the market continued to drop. All profit objectives easily hit to the downside, and then you would wait for one more time to get short. If you weren't already short, you'd be looking to go short again this market as it rallied up off this low. So again, if you're flat the market, so all your profit objectives and then some were hit, if you trailed up your stop, chances are you'd have been taken out right in here. But as the market continues to rally, there's no doubt you're looking to go short again. So as the market rallies up, you definitely want to be putting on a position right in here. Roughly 1504 and a half is another great area to go short. You just want to make sure that your stop is above logical resistance. And again, logical resistance would be the daily S1, the deep purple 50 exponential moving average. So right in here, optimal selling opportunity again at 1504. Let's see what the market does from there. The market at that point, look at the market's 2 o'clock up off the low of the day. You're looking for the market to resume back down to try to retest the low of the day. So if you're selling the market at 1504 and a half, you're looking for the market to come down minimum to 1499 and a half to retest that low. Let's see what happens in here. Okay, it's giving you a little it's not going straight down by any means. It's giving you a little, not heart palpitations here, but look at, you know, the market should be dropping. You're giving it some time. You're exercising patience and discipline. And finally, the market starts to drop. Look at this. Takes out the low, and there you have it. I mean, yesterday was just a phenomenal day for selling the market short. All right. Hope that helps. And here, let me just talk about, here, let me go back to the PPG trade that I was in yesterday. Let me go back to a chart here. All right, the PPG trade, if you recall, we were long this market at 130.94. As I was seeing the overall market drop yesterday after I did the video, I decided to take this trade off early. Ended up exiting the trade at like 131.60. So again, I was long at 130.94. If you recall, we moved our stop up to below the low on Friday. Friday's low at 130.10 to 129.90. As the market was selling off yesterday, I decided just to bail on this trade altogether. Again, what did I make on this? About 70 cents on this trade. So pretty much flat. So I'm pretty much flat right now. And again, looking at that daily chart, you know, the market's down at the 50% retracement right in here. It's a huge reversal pattern. There's no doubt about it. This is a big, huge bearish engulfing pattern, right? Took out the high and took out the low of Friday. I mean, and a huge volume. So I'm stepping aside, and I'm kind of waiting to see if the market has any follow through to the downside. Bernanke's talking today as well, so I want to be a little careful. And again, volatility just zoomed yesterday, right? Really expanded. A big reversal pattern, right? Closed on the low of the day. Big reversal pattern after failing off this high right in here. So again, I want to give it a couple days to see if we've got any follow through to the downside, or if in fact we start basing in here before heading higher. So I want to wait, be patient, and see what today and tomorrow brings, okay? Especially with Bernanke talking today. So have a profitable day, and I will talk to you tomorrow. Bye for now.